Hello and welcome to Crux Investor. We caught up with Ian Berzins earlier today. He's the CEO of Braveheart Resources, a company with two copper projects, formerly producing copper projects, but now with a contribution from a significant gold asset, which they're going to be able to process through their own mill. Complicated story. If you want our thoughts and opinions on that conversation, the topics discussed, their business plan, their strategy for delivering it, and indeed the company itself, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis as commentary from experts from around the world on a variety of topics, including copper. So go, that's quite insightful. We've got training courses for you to help you with your diligence process. We've done summaries of interviews, in fact, all of our interviews to save you some time because we know you're busy. And most of all, if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from judgment, trolling and abuse, I hope you think that sounds nice because it is, you should join them at cruxinvestor.com/club. And we love your feedback too, so do give us a like, it'd be appreciated. Leave your thoughts below. We'll get back to everyone. And if you want to see precisely what we talked about today, do take a look in the description below. Ian, how are you, sir?
Well, Matthew, doing well in Calgary here.
Doing well in Calgary, looking resplendent in your jacket. I feel underdressed. Thanks for making the effort.
You outdid me last time, so I was embarrassed.
Hey, well, good to see you. So we spoke just before Christmas, and we actually went through quite a detailed run through the business plan, strategy, the team, money, all of those good things. And we'll put a link to that below because people, if you're interested in this story, I think you probably could be. Have a look at that, please. So how have things been? You been okay?
Yeah, no, I mean, family and friends hanging in with this COVID world. So everything there is good on that front. We're just, I think everyone's impatient and tired and wants to get back out again. Hasn't affected our operations significantly because we're kind of in that startup with permitting and those kind of things. But certainly it's had an impact just on ability to move relationships, those kind of things forward with not just government, but First Nations and our different, interested stakeholders, if you will.
Right. Well, let's talk about that because I want to know what you've been doing since we last spoke. We've had, just over 3 months of it. From what I read, you've been busy, but I want to understand why. But before we do, let's give us that 1 minute overview of the business and I'll pick it up with some questions from there.
Yeah, so Braveheart is a junior mining company, started really as an exploration company. We're moving quickly through development, actually into production, and we expect to be one of the newer producing mines or junior mining companies in Canada, which I think makes us particularly unique. We began, when we last talked, we had a principal asset called the Bull River Mine. It's copper, gold, and silver near Cranbrook, British Columbia, all the infrastructure nearby that we are excited about. And when we last chatted, we had just stepped out and took a chance to try to acquire a larger project actually in Pickle Lake, Ontario, which was called the Terry Mine, copper, nickel, but it also has palladium, platinum, gold, and silver. So this is an operation that was run by UMEX for 6 years between 1976 and 82. And what intrigued us, there's a large resource, over 22 million tons underground at about 1.7% copper, and also a large open pit project, if you will, that's in an inferred category. So significant assets there. We bought them lock, stock, and barrel. We own 100% of them for 2.5 million Canadian. So we think that was very accretive to our long-term prospects. As I said, it's a bit larger than what we have going on at Bull River, but the intent really is to get Bull River up and running, get a modest cash flow from Bull River, understand Terry a little bit better from the point of view of the geology and how to attack the project. So that's what we had at the time, and it was. I like to talk a little bit, about some of the aspects of both, primarily Bull River and we will. Terry.
And we will. But I need to talk about an outlier first. You've also gone and acquired another asset, gold asset, not copper, gold. Why?
So again, a great question. If that came from the listeners, I'm not sure, but I've been asked why we would do that. And I guess when I first joined the company, that was the sole asset that Braveheart had. It was an option on a high grade gold mine. I thought the agreement was too expensive. And so I subsequently dropped it about 18 months ago because we just couldn't afford to keep it. But as we moved forward and worked with the underlying owners, we said, gold, when we acquired that option, was $1,200 US. A couple of weeks back, we were up above 1,800. So the margins were good at 1,200. They're much better at 1,800. And now that we own 100% of a mill in Cranbrook, BC, which is about 300 kilometers away, we can actually, from initially a bulk sample, we hope to mine high grade pre-concentrated ore feed and take it over to Bull River. And so when this thing was mined, it was mined at 22 grams gold, which was quite high grade in 1938 to 40. So it is narrow, it is flat, it's got interesting mining challenges, but that's what the challenge is at the site, because we're going to truck a concentrate ore product to our mill. So those costs are relatively easy to understand. So the margins on that, once the mine's permitted, will be pretty good. And we would look at it as really an incremental fee to Bull River. We've got about 140,000 ounces at 16.5 grams. And through ore sorting, we've already established that we can take that grade of about 16.5, probably up to 22, based on our work we did with Steinhardt 2.5 years ago. So it's really in our back pocket. The only thing we have to spend on it, we didn't spend anything to reacquire it. Effectively, I agreed that we would build upgrade a current goat path, if you will, but it's a road. But we would get a road about 17 kilometers from the main highway near Nelson, BC, up to the mine. The mine's up at about 7,000 foot elevation. So our commitment is that we will design, permit, and build that road by December 15th of 2022. So a full 22 months out. We already did the pre-engineering when we owned the option before. And so it's really a matter, if we can permit it this summer, then we may even build the road this summer. And our estimated cost is around $350,000. So in order to hold the option now, it really, it's not an onerous project for us to hold for another 22 months. And we think that in a market that seems to be rewarding silver and gold more than copper, that it's good to have the diversification of metals.
Yeah, I mean, it has been rewarding precious metals and could again soon. Like I said, 1,800, I'd be happy. So this road, so it's 350K. That's it. 17 kilometers, 350K.
Yep, it's already in place. We have to, I mean, there's a few areas on that road where there's probably, we got to stay away from an avalanche hazard potentially, but the road is, part of it, it's a Forest Service road already. So, yeah, okay.
Yeah, avoid the avalanches. I think that's sensible. That's my contribution. Yeah. But let's get back to why it's important for you. Because I get, a lot about it. So there's a bit of history. There's a legacy there. So you've got a head start, and the price environment's better. So that's all good. But you gave us a clue there as to why it's important to the business. And the reason I want to spend a bit of time on this is because we've had some questions sent in. We say, get focused. Just get focused on Bull River. Why are you being distracted? This is incremental cash for you to help you develop out Cherry Mine, because Cherry is not going to be financed with Bull River alone. You're going to need help. So is this why this Alpine gold property is important?
Yeah, again, it's strategic for all those reasons, because the reality is that the cash flow on a unit basis out of Alpine will be about 4 times higher than Bull River. Bull River is a good little operation, but at 1.7% copper, or at these current copper prices, the economics are pretty good. At lower copper prices, Bull River would be on the cusp again. Whereas Alpine, with pre-concentration, we'll get about 4 times the value. So we would look at saying, if we can get Alpine permitted, it's not going to be a hobby mine, but we might run Alpine ore, let's say 3-4 days a month, otherwise running Bull River. And all we really have to do is add a gravity concentrator, either a Nelson or a Falcon, at the current mill. those are relatively inexpensive. And we've already done the metallurgy where we know that 80% of the gold at Alpine is gravity recoverable. The other 15%, we'd arguably commingle it with the copper concentrates that we plan to sell to the Asian smelters. So it's a really interesting incremental mine. On its own, it wasn't a company maker to me, but as an incremental feed, it's genius. And we think that it also sets up the Bull River Mill to be what you might almost consider a regional mill. So there are other small producers that might have high grade that we could talk to going forward, but it's certainly not a distraction, and it's not going to take capital away from us that needs to go into Bull River. So I want to assure people that this is not a change in focus. This is really an incremental, accretive addition.
Right. So this is, yeah, exactly. This is to add cash to whatever Bull River can contribute in terms of positive cash flow, so that you can focus at some point, the relevant point, on Thierry Mine, which is a significantly larger asset. It's the real prize down the line, right?
Exactly. And again, people have asked, could it be a larger deposit? The short answer is yes. We've got about 275,000 tons. We're going to make a net profit on those tons of about $500 a ton. So it's significant. It'll be small. It'll be probably adding maybe 35,000, 40,000 tons a year going forward. But we'd probably blend it. And we have to decide, once the permanent road is in, the other thing that happens is we have access year round. All the drilling programs we've done to date at Alpine have been helicopter assist, which is it's an expensive way to have to drill holes. So now we can actually get up to the portal. The mine is dewatered. We could go in, we could travel there tomorrow quite easily except if there's snow in front of the portal. But the mine is open, dewatered, and so we like that. It's at the top of the mountain ridge. So we don't have any holding costs to keep that operation in our portfolio. And so again, we have a little bit of gold at Bull River. We got a little bit of gold at Terry, but this is a high grade feed for us, which again, we can demonstrate that not only we focus primarily on copper, but we've also got gold and silver.
Okay. You'd say, people, this is good news at this price, positive cash flow contribution. Don't worry about it. It's not distracting us either. Okay, good. Part that it's not even an outlier. Described as an outlier. It's not an outlier. It's a pretty important contributor towards positive cash flow going forward. So let's get back to Bull River Mine, and without going over the ground we covered last time, you've inherited a significant amount of infrastructure there. You've been frugal in the way that you've upgraded it, and you focused on a few core pieces to kind of help you get Bull River Mine going. So what is the timing of, what have you done in the last 3 months to move that project forward?
So one of the most important projects, right now we're lacking a permit to be able to mill tailings at the site and to deposit them on surface. So we've done most of our work towards what's called filtered tailings or dry stack, which in British Columbia is considered one of the best available technologies. So we began that study with Stantec back in July, and we have our final reports from Stantec. So those are ready to be submitted to government. So that's been a bit of a work in progress, but frankly, it was $400,000 worth of engineering studies to get it done, but now it's done. So now what we're looking at is again, coming back at Bull River to what I call a phased approach, where we have a unique situation with 165,000 tons of material on the ground. And for argument's sake, this was material that originated in the underground mine. So it's sulfide bearing copper rocks, mainly chalcopyrite, but there is some amount of leaching, if you will, from that pile. So even from an environmental perspective, we're saying to government, this is a long-term obligation of the proponent, whoever that may be. Today it's us, and we want to get rid of that pile, and we want to make a little money doing it. So that's our really first prize. And with mining the surface stockpile on its own, there's enough proceeds to, number one, pay for the mining, eliminate all of our senior debt, and pay for the upgrades, and still have probably $8 to $10 million of walking around money. So the project is very robust once it's built and once we have our permit. Brownfields, so that doesn't mean that the permit's imminent tomorrow, but we are progressing those discussions, if you will, where again, first phase will be to mill the surface stockpile. And I want to point out, Matthew, this isn't mining tailings. I get asked a lot of people say, oh, well, you're going to mine the tailings. Well, a lot of guys try to mine tailings, and there's obviously some value behind, but they're never as successful as they want to be setting out. This is not tailings. This is run-of-mine material that will grade about 1.7% copper equivalent, and it's on surface. So $50, $60 of mining costs aren't there. So this is why the economics are robust. And so that was the first thing. So the permit process, it's an iterative thing where you make submissions and then you get feedback, and then you may be asked to include something else. We spoke briefly about avalanches. We have to put together an avalanche study. It's going to cost me somewhere between $11,000 and $18,000, but we got to do it, right? So those are the things that as we go through the application, we tick the boxes. But in parallel, what we're doing is we have support of the board that we continue with the capital upgrades. So as much as we're waiting for the permit, I'd like to be in a position that should we get the permit late fall, early Q4 this year, that the capital upgrades are already in place. So one of the key ones is, as I mentioned before, we lost a transformer. We didn't, but the previous owner did through a fire during care and maintenance in 2014. We own that transformer. We're going to be moving it to site with the plan to reconnect with BC Hydro in June. Once that project's done, now we have sufficient access to grid power for double what we're planning in the foreseeable future. Then we have a capital project with flotation cells because we're producing a copper concentrate, and we've located some filtration cells as well. And then we have to do some civil works associated with the dry stack. So all in all, people, they question us when we say we've got capital upgrades of about $5 million, and we're trying to leverage essentially $95 million of usable infrastructure to get back going again. So it's, to me, it's extremely unique, and the proof will be in the pudding when we can, start up the mill and get going. So one of the things we have done and is that we have a theme throughout the company about trying to utilize newer technology. And so one of the things, and it's not particularly novel, is for us, is ore sorting. And we've done a very interesting study right now where we sent material to Germany. It's been returned. We've had it assayed in Vancouver, Canada. And what we're looking to do is that 165,000 ton pile, it'll have probably 25% fines, but probably 25 to 35% of the remaining material can be removed. Call it essentially, it's low grade, it's waste. So essentially through that, we would be looking to eliminate a significant portion of that pile. So in most mill operations, your biggest cost in a mill is the grinding circuit. So after crushing, you've got the grinding, and the grinding is really where you pulverize the material to extract the metals. Well, if you don't have to pulverize all that material, the coarse waste-ish material can actually be commingled in the dry stack. So we see it as a real win-win. We may not be able to buy an ore sorting machine right off the get-go, but we may be able to lease, rent, to own something like that. And our intent would really be to shave the cost of that operation by $500,000 to $1 million when it comes time to actually do it. The other thing that's happened to us is people have said, well, how do you know what the value is of the stockpile? And you've got a large pile 20 meters high, and you can drill it and you can scratch at it and all the rest, but the proof will be in the pudding when we do the ore sorting and actually assay. So now we know 100% what our expectation should be when that stuff goes through the mill. So we think that the ore sorting, again, it's a component where we've already demonstrated that it works at Alpine. We were able to take a 21 gram gold assay at Alpine and upgrade it to about 43 grams gold in the Steinhardt machine. So we know that it's amenable. We know now that Bull River is amenable, and as I mentioned, we'll be putting some results out later this week or early next week. And then in the big picture is that we're going to eventually want to work on a design for the new mill at Terry. So if the ore sorting works on similar grade ores at Bull River, it's not to say it'll be identical for Terry, but it makes us put our thinking caps on about what happens if you integrate ore sorting into the original design, a new mill design at Terry. So again, it's early stages for us. We got to walk, got to understand some of the information, but it does bode well. And the other thing that'll happen is that as we mine underground, we've currently got about 6.5 years at Bull River. But if we're able to apply ore sorting, then arguably you could be ultimately feeding a higher grade product that may allow you actually to take the mine deeper than you might otherwise do. So we're just going to get, we're excited about getting a lot of learnings in the next 12 months and try to apply those as best we can and as cost effectively as we can.
Okay. Thanks for all that, and thanks for going through the ore sorter. It was a question which I did want to talk to you about, so I think that answers it, though, for me. When I'm listening to that, I'm just trying to build a picture of the chess pieces around the board, because you talked before, and you've already mentioned the word strategy here today to me. Okay, Bull River gives you $8 or $9 million of walking around money, all said and done. That's what you said earlier there. The gold will make a contribution, but all of that, and I don't know what that number is. Do you have a number on that?
Yeah, so no, that the Alpine gold contribution just on the current resource could be $175 million. It's very significant over a period of 6 years, depending on the mining rate that we do there, and depending on whether or not we can expand that resource. So it's a significant contributor.
So people shouldn't be asking you why you're getting distracted with Alpine Gold. They should be asking why you're getting distracted with Bull River. But slightly tongue in cheek, but it's and at the same time serious, right? So that all of that money from Alpine Gold, from Bull River, is going to be put back into Thierry. It's a significant project, and that'll give you a nice head start, as it were, in terms of one. I know you're also doing some optimization work about reducing the capex on the current PEA, and you'll do that too. And that's all going to work towards something which is not an insignificant capex requirement. Why this long drawn out process? Why not just go and raise the money? The copper price has, really kind of gone through the roof. It's been on a tear for the last sort of 6 to 9 months. Why not go and find yourself someone with a deep pockets and get Thierry going concurrently?
Well, number one, if I return to Bull River, what we've faced since we owned this project is that if we had a permit, we could raise the money. And if we had the money, we could live out the permit process. So a number of people would say that Bull River is kind of interesting. You guys bought it cheap. You've got 150 million tax pools. We get all that, but it's going to be a small project. So what are you going to do next? So we were kind of criticized. We didn't have something next. Well, we were able to basically pick up this Terry project, which now is 10 to 15 times larger. So not big, go big or go small, but this is a big project. And it may be that I think, at least as we go forward, there's going to be other people that look and say, what copper projects are available in Canada? Holy, there's Braveheart. They might be too small, but let's cozy up and see what we can do there. So we're not, I could see some sort of a partnership arrangement going down the road. We currently don't have royalties on any of our properties. And by nature, I'm not a big fan of royalties because you kind of give up your firstborn, sometimes your second, but there is a time, there's a place for them. And so it could be that, by not having royalties, we might be the guys that layer one on. But it was interesting when we acquired Terry that when I initially did the deal, we paid about $2.5 million Canadian to buy this asset. It's valued in the PEA at $240 million NPV after tax at a 6% discount rate. At today's copper price of $4, it's actually, the NPV goes up to 400 million. So we scooped this in my mind, but part of the deal was that the underlying owner, Cadillac, would retain a 2% NSR. We could buy back 1% of that for $1 million. So again, without getting cheeky, I said to myself, this is, I'd love to have this without royalties. So we issued some shares of Braveheart, equivalent value of about $300,000 to reacquire the full 2%. So when we did that, if you do the math on that, the Terry Underground on its own, assuming you were going to buy back the 1% for 1 million is a bit of a no-brainer, you'd go and have to pay about $26 million when you mine Terry alone. So then you look at the K1 deposit, the open pit, you'd have to, that would be another 17 million. So essentially, by issuing about 2.5 million shares of Braveheart, we've acquired the royalties on that whole property, and we basically offset a future liability of 40 to 50 million. Now, granted, it's down the road, but it allows us to come back in if we want to and maybe put a 0.5% or 1% with some other party that specializes in that field. So, yeah, so that's, I digressed a little bit on the royalty aspect, but that's the way we see Terry right now.
But that's one aspect of it, and I'm glad you took, I guess, another one of my questions, so which was about royalty. But no, but come back. My point being that given the market, given the size of Terry, why go through this linear process of getting it funded? Could you, or do you want to accelerate that process? So I get the problem solving thing, and you're problem solving it in the best way for your shareholders today. But at the same time, there's this trade-off between getting it done quickly with slightly less economics and taking a lot longer. And who knows what happens in the marketplace? Markets change, and certainty may not be there somewhere down the line. So how do you balance that thinking at a board level, or even yourself?
Yeah, well, let me talk a minute about feasibility studies and PEAs and pre-fees and fees. So at Bull River, I've been criticized that we haven't spent $500,000 to do a pre-fees or a fees on a project that we're going to build anyway. So rightly or wrongly, we say we're already there. We don't need that. The banks might like it, but we don't need it. Terry was different. So we expedited the PEA. So from the time I talked to you, we actually completed a PEA in 30 days. Frankly, we already started it. But at the end of the day, we thought with a PEA that came in at 240 million in this market, that should have been a kicker to our market cap of about 10 million. Just inside, when we look around the boardroom and talk about you pay 2.5, you've got $2.5 billion of metal, it's got to be worth something. But it didn't move the needle. And partly, in my mind, it didn't move the needle because the $400,000 capital cost to get it going, people would look and say, well, the guys before couldn't do it. The new guys, nice to have the report, but they'll never build it. So, oh well. So as a result, we've looked at commissioning with the same QP that did the underlying report, a bit of a different study. So we have a base study on underground only for Terry. Now we're looking at if we were to focus initially on the open pit potential and put that to the mill as a starting point, we could arguably cut the capital cost down to maybe 150 to 175 million, which is still a big number, but it's not as big a number as 400. And in order to do that, we have about 53 million tons at 0.4% copper near surface, plus 0.1% nickel. palladium, platinum, gold, and silver byproduct potential. And so what we're doing that's planning this summer is we'll be drilling some follow-up holes for some successful work from 2013, where the previous owner, they drilled 825 feet over at 0.4 with continuous mineralization. So those are significant intersections, and if we can get more of the same, I think that we can, I would expect that we're going to be able to upgrade that 54 million tons either to some M&I from the inferred category or add to the current Whittle Shell. So that again, people saying, well, how big does a project have to be? Well, I guess it depends on who's looking at it. But I think that there's a really good potential with some drilling programs this year, probably followed by next, that we may be able to get that K1 deposit up over 100 million. Now it starts to become more of a, not quite a regional play, but that area, I mean, there's mineralized zones throughout that land package, and it's a matter of where do you go and how do you get to cash flow? Because that's what Braveheart's trying to do differently than other companies, is what's the fastest path to cash flow, knowing full well that permit processes are what they are. So we're probably still 3 years away at Terry from having all the permits we would need to actually start mining. But you got to start the process. And so in the meantime, the key is really Bull River is the fastest to free cash. Alpine, to your point, we might make more money on Alpine running for a couple of months than we will at Bull River. But guess what? We own the mill. So some of this will be, we'll look for our successes. We'll try to make sure that we watch how we spend money. And but clearly, it's getting to cash flow this year, learning more about Terry in the coming year, and then we'll look at the strength of the assets.
So what do shareholders think here? Because I get the Alpine Gold story, and I think more people listening to this will get the Alpine Gold story. They won't be asking questions about where you should be focusing your money. But Bull River, it produces, like you say, walking around money. That's probably a good way to describe it. Like, you wouldn't necessarily get out of bed if that was the only asset that, you had, right? But it depends what you do with that cash. Because if Thierry is 3 years away from mining, 3 years, it's a long time, right? A lot happens in 3 years. What are you going to do with the money you think you're going to be able to produce in the intervening time? Because people don't want to hear growth stories. They want to hear what you're doing with it. Is it just going back in the ground at Thierry and then there's a long story, with a big tail to it? Or are there other opportunities that you think, given you've got the mill and hopefully the mill's, working, that you could focus on?
Yeah, it's going to be a trade-off between, if we go and try to grab other assets, then on one hand, you get criticized with lack of focus. One of the areas that we were criticized with is that we had $11 million of debt less than probably 6 months ago. So we successfully, in 2 different undertakings, we've eliminated $6 million of convertible debt. So the original note holders, if you will, are now full-time shareholders. So that's been eliminated. And we were able also, in parallel, we had a rather expensive secured facility with our primary lender, Aaron Matlock, for $5 million. We completely were up to date with the accrued interest was completely paid back in shares. And we also were able to lower the interest rate from 14.8 to 10%, which is still a high number, but it's less than it was. So we've been looking quite clearly at debt. And our goal is that through the early proceeds from Bull River is we want to completely eliminate that debt and then be able to have a picture where we may have a small operation or operations, but they're 100% owned, no royalties, debt-free, and a modest cash flow, and see what the world looks like a little bit. So we have to look at, I think at Terry, probably where we would get the better bang for our buck is really trying to spend a little bit more time on the ore body itself, because this is not trying to do grassroots drilling. There's been my estimation, probably better part of $30 million of drilling that was largely successful. So we want to basically own that database, own that understanding of the property. And then I think that if there are some larger players that want to work with us on it, we'll have to seriously look at that, because as you mentioned a minute ago, you don't want to miss the cycle. I mean, 5 years from now, we could go in a copper cycle there. We're going, oh, now we missed it. Now we got to wait again. So, but right now, Terry doesn't really cost us anything to hold on to. Alpine doesn't cost us anything to hold on to. The one that costs us, frankly, is Bull River, because we've kept it dewatered for 10 years. So those are real costs. So we'll look, and I think we balance that. If there are some other assets in that kind of space of metals that that we could add and be accretive, maybe we catch part of this electrification wave. We think we should be there already with the amount of copper we've got. We believe we should be on a few more radar screens than we are. We understand BHP is coming back to Toronto, so I don't know if that means they'll look at us or not. But but there will be, I think, a fit at certain point. And what I looked at some graphs this morning, and if you look, when we last talked, copper was at $3.50 US a pound. Today it's at $4. I looked at 3 intermediate copper producers in Western Canada that have all in the last 3 months moved up by 32 to 68% in market cap, simply because they're producers.
Yeah, but you're in a funny place though, Ian, because doing a debt for equity swap, nice. Tidying up the balance sheet, nice. And funny, the size or lack of size was probably in your favor. It's like, I better do something. Those people probably think, I better do something. I'm never going to see my money here, and I don't want to ruin my options of ever getting my money back. So I think that was kind of lucky for you and good timing for you. But likewise, trying to hit this battery metal cycle that we're going through at the moment is important. And there are super cycles, and they come and they go. Whatever the copper bulls or gold bulls think, there are cycles. It just happens. And does that not worry you that you're not going to hit it this time around, and that you are going to be slightly left behind and have another period, a fallow period, to work your way through, unless you kind of get this momentum going into the project? Because even if I look at Bull River, the permit required there, I know you've got the process well started, but are there any guarantees around how quickly they turn that around for you?
Well, again, short answer is no. And then the other uncertainty is the Ktunaxa First Nation. But we began dialogue with Ktunaxa back in September of 2018, before we actually owned the mine. And because we realized at the time that was going to be critical to what we're doing. Our footprint is minor. It's a postage stamp compared to what Teck is doing in the valley next door. But the relationships are important. So that to me is key, and we're very close to being able to sign an engagement agreement with Ktunaxa. Originally, we planned for the end of March, and we're still, March is not over, but it'll likely be April. But nevertheless, that's going to be a key component of the approval process by government, because as stewards of the land, there's particular concern for water management. So those are issues that we know we're going to have to deal with. So the permit process, we still think that 6 months from the time that all the final application is in front of government is realistic. I'd love it to be faster, but like I mentioned, I think offline before, with COVID, we lost a lot of time since last March, where government and the First Nations just didn't have the capacity to really work with us. So, but it is what it is, and we're not through it yet. But I think that those relationships are important, and Braveheart has advanced the relationship with Ktunaxa further than it's ever been in the history of the mine. So again, it's one of those building blocks. I'd like to announce that engagement agreement when we get it done here. again, the market, depending on the sophistication of the investor, some people that have been with the project for a while will see that as a huge milestone. And just about everybody agrees that the day you get your permit, that's when the floodgates open in a small way. It just allows you to become a producer, not overnight, but there's very few operations that would have 8 months of mine feed. And I always like to point out that some investors ask me, "Are you guys are going to mine some tailings on surface?" And I said, "No, it's not tailings. This is run of mine material that came out of the guts of the ore body."
Yeah, you said, and like, okay, so permit hopefully on its way. There's a process that you started. I noticed the concentrate offtake agreement that you've signed. So that's good. It shows intent.
Yes.
Right. Who's that with, and why go early?
Yeah, that's with Ocean Partners. And I mean, I won't get into all the names, but we've talked to 3 or 4, I'll call them majors. And in each case, the stumbling block is that it was we have a saleable con. It's going to be a good product. There aren't a lot of nasties in it the smelters are going to be concerned about. We have history. So to sell the product wasn't going to be a challenge, but what I was looking for was to get a prepayment on that stockpile on the ground. So in the case of Ocean, we agreed to that they have, we will sell the first 45,000 wet metric tons to Ocean, and they have a ROFR after that going forward. That would represent probably 3.5 years out, and which I like because it simplifies for a junior the back end of concentrate sales process. And they also agreed to loan us $3.5 million at terms that are slightly better than our current senior secured creditor. There are conditions precedent on that where we're able to draw initially $1 million US. And I can then draw later when we get a permit and when we raise some money in parallel from other Canadian sources here. So the first million is key to me because that allows me to at least complete 1 or 2 of the capital projects that are currently in the pipeline.
Got it. Understood. So that's important. So 1 million now, and then the rest conditional. Are there any other kind of securitizations or liens against any of the infrastructure that you have there?
Yeah, it's a great. I mean, currently we have a general security agreement with Matlock Farms against the Bull River property. Investors that have come subsequent to that have wanted our secured guy to stand behind in a subordinate position, which is always kind of a nice ask. And they're saying new money trumps old money, but we were able to agree to pari passu. So that's good for our current lender. And now, if there comes a point in time where somebody wants to call a loan, you actually have to have both parties agree that it's going to happen. So we would consider the Matlock loan as friendly as it could be, and we think we're on the right footing with Ocean as a partnership. But at the end of the day, Ocean didn't get into this to lend us money. They want to sell our concentrates, and so they were a bit more nimble, and they were, I think, maybe a bit more forward thinking or less bureaucratic. That they looked at this and say, the prize is quite a bit larger, and of course, whoever sells concentrates with us at Bull River, they're going to be very interested in Terry should that day come as well.
So that $1 million, you said, you gave me a clue there. You will be able to pay for 1 or 2 of the projects that you want to do. If it can't pay for the second one or the third one or the fourth one, suggests to me that you're going to need to raise some capital and raise some capital soon. So are you going to?
Yeah. So in the next, I would say 3 to 4 months, I want to secure, I'll call it about 2 million Canadian of hard dollars. So flow through is relatively easy for us, but it doesn't help us with the capital upgrades. So we're looking at various ways of how do we bring another 2 in, because frankly, what'll happen is with conditions that we don't get the second tranche, if you will, from Ocean until we have the permit, I can't wait on the capital instant. We could wait, but then we're going to add another 3 to 6 months on trying to procure the right equipment or keep the same equipment. So the projects I'm really referring to is a large transformer, a 10 MVA transformer. We actually own it. We bought it a year and a half ago, 2 years ago. So we need to move that in May from Manitoba to BC, and we have a connection date with Hydro in June. So that project will tick the box and that'll be done. And my suspicion right now is that we won't have to spend more than about $500,000 to finish that off. Could be less, just the way things are lining up. And then, of course, I always have to convert like 1 million US is like 1.3 Canadian. So, and it's 100,000 here and it's 100,000 there, but we have secured rougher and scavenger flotation cells with a party near Kamloops, British Columbia. And we want them, we basically bought 6 tanks and they're refurbished them as we can afford to pay for them. So those would be the first 2 projects I'd be trying to advance. The filtration project, we've looked at new cells, which are about $2 million. And we have a used option that I don't want to say where it is because someone might scoop us. But we have a used option that's quite a bit more frugal, but it should meet our needs. And then the final one is the civil works with the tailings. So one of the biggest capital costs associated with the tailings project was the engineering. And we spent most of the engineering money. So when I talk about $5 million to complete the upgrades, I don't want to sandbag anybody, but we've done a lot of work between engineering and actually procurement, some of which we've talked about publicly, but we do want to basically tick these boxes. And as each of these projects is complete, then we again de-risk the asset or de-risk the project from the point of view of people that are looking, for, call it the final financing. So I think today 2 million Canadian will probably do, but it might be a bit more than that, and we're just investigating what ways and means we can bring those funds in. It sounds like a low number, but again, you get into things where people may want to lend you to, and then they want to sit as senior secured position, and that disrupts it all. So we're also trying to find some people that recognize that we've acquired some pretty significant assets here at fairly bargain acquisition prices, but until we have those people step up, they haven't.
Okay. Well, look, Ian, I appreciate today you kind of run through what you've been up to in the last 3 months. What I'm hearing is that you want to be in control of your own destiny, and you've done a lot of things in the last 4 months since we actually spoke, I suspect. Sad to say. But there are things that you're not in control of, and that's obviously you've got to get this permit sorted for Bull River. You've got your negotiations with First Nations to conclude. You've got a few other. You've got some things that you need to get in place to get things moving, to put yourself in a position where you can actually get to a cash flowing position, which I guess people want to see you moving towards. So look, stay in touch with us. Let us know how you get on. I'm intrigued by how you're piecing this together, the chess moves, as it were. But you're going to need something significant, something meaningful, I guess, before people recognize it and the share price starts moving the direction that I guess you want it to be moving in.
Yeah, no, I mean, and again, when I don't want to spend a lot of time on the gold aspect, but we look at some competitors here that have picked up gold assets, and all of a sudden, almost overnight, they're valued at 35 million, and the projects are, they're a ways away because we understand them. So there's a lot of, I think, misvaluations out there. I think we are grossly undervalued, but again, I respect the fact that we still have to, it's a show me story, so we really have to demonstrate again. I think we've had tremendously good material information, but people are still saying, well, when are you going to get your permit? And it's not a topic that's easy to talk about definitively because, I can't guarantee that it's 60 days away and it wouldn't be fair to government. So but we're just going to methodically, push forward. A lot of juniors get the sizzle as well from the drill bit. And what was lost on the market last Q1 of last year, we embarked upon a drilling program underground at Bull River. People said the deposit's too small. So we did 5 drill holes that all intersected the ore body 115 meters below the 350 meter level. So that on paper arguably actually does increase the size of what's there. We want to drill a couple of deeper holes. And if we can get similar grade or potentially better with widths, that starts to say to people, well, I'm quite comfortable that Bull River could be a 20-year project, but I can't get too far ahead with the crystal ball until we get pierce points. So we went 5 for 5 on that drilling campaign, which was really good. And then we got hit by COVID and we had to shut the machine down. And again, back in first quarter of 2020, copper was interesting, but it wasn't that interesting. It was probably $3 or something like that. So I think if we were again to drill those holes today and supplement them with some good holes at Terry, we might get some excitement on the drill bit as well as the production story.
Well, let's see if you do. Okay, thank you very much for today, Ian. We'll speak to you again soon.
Thanks, Matthew.